Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick. I hope you all are having a better morning than the market today. Market's got a case of the Mondays. A number of catalysts we were just talking about over the weekend weighing on things this morning. You've got COVID cases still rising. You've got this report about 20 years worth of suspicious banking activity. Regardless of the catalyst, the market is in a spot here. We're going to talk about where it's at, what it means going forward, and sort of maybe the cliff that we are peering over the edge on this morning. Nikola, of course, is the top story of the morning. Aside from the overall market talk, Trevor Milton out as chairman, so talk about the follow through in the stock and that. Our guest is Alan Brochstein. He is the founder of New Cannabis Ventures, author of the 420 Investor. He will join us at 8:35, give us an update on what's happening in cannabis. I want to see some likes. I want to see some subscriptions. And now I will throw it to Joel. And Joel, tell us about the damage here in the pre-market session.
Some definite follow through from Friday's week close. Attempted to rally off that 6 p.m. open. We can only get up 10 handles above your closing price. Your pre-market high, 33.26 and a quarter. We've traded as low as 47 and a quarter. That's right near my August 3rd low of 44.50. Nice bounce off that. So maybe it'll take another day or two to take out that level. Crude's in the red here by 92 cents, but still over $40 here at 40.40. Hanging in there for now. We'll see if we can hold above 40 for another couple sessions. Not liking gold either. Gold down $25.40 at 1936.70. Silver under $27 at 26.49.5. That's down 63 cents. And Bitcoin, no one even likes Bitcoin this morning. Bitcoin is down $280 at 10,600. Triple D, we talk about expirations. We talk about turning points. I wish I would have made this bet with you on Friday, but on Friday's close. But are we in for a rough 3 months here in the market until the December expiration?
There's just a lot of things to be concerned about. And I'm going to say what I said on Friday. Anybody who says they know where this market is going, even a week from now, just forget about everything they're saying. Nobody, not one person in the whole world knows where this market is going in the next week. We could turn around and just start ripping, and then the dippers could come back in, or there could be follow through. I mean, there's a bull and a bear case here. The bear case, if you want to hear the bad news first, we'll give you the bad news first. The bear case is the banks look like hell, and the banks have looked like hell. And if you're looking at buying the dip on stuff, I'm not buying the dip in banks. That's the one thing I would not touch because the relative strength on them has been very poor. We have this news we're going to get to here in a second, but we're just kind of trying to give you the overall landscape here. Obviously, we've had a significant sell-off in a lot of tech stocks, but that was just because they were overbought. You know, what's more concerning to me is the breakdown in some of the stocks that weren't overbought. And you're starting to see that happen across the board. And you're looking overseas and you're looking at stocks like, you know, the banks like HSBC make new 20-year lows. And you're like, man, if the banking system is really having this many problems, that's not, you know, a good sign for the overall economy. So, you know, and obviously, you know, we were just overbought too. So, you know, that's kind of the bear case. The bull case is, hey, we've been through worse. You know, yes, the cases are rising a little bit in the UK, but we've been through a hell of a lot worse. It looked like the end of the world in March, and that turned out to be one of the best buying opportunities in the last decade. So, you know, the bull case is going to say this is just a profit-taking dip. Yes, probably stay away from some of these stocks that haven't been participating in the rallies. But when you look to tech, you know, the tech stocks are still holding up fairly well, even today. I mean, if you look, where is the damage being done? It's not in the Qs. It's not really, you know, yes, they're getting hit 1.49%, But you look at Bank of America down 3.77%, JP Morgan down 4.5%, and overseas Deutsche Bank down 7%, and Barclays down 6%. It's the banks that are really the catalyst here for today's fall. And, if you've been sitting back and saying, man, these banks have so much value, like, we've heard so many people on, so many commentators on Fast Money that keep saying, yeah, the bank's eventually going to come back. You know what? I don't know if they're going to come back, because you can argue, oh yeah, the banks eventually have to come back. But if you bought Citigroup back during the financial crisis in 2008 and, or before it, the stock was $500. People think Citigroup came back because it got back to 80. They don't realize, you take your chart back enough, there's a reverse 10-for-1 split in there. So this is really still trading at $4.30 if you back out the split, which is, where it really is, from being at $50 in 2008. So if you bought Citigroup back in 2007, before the financial crisis started, you were still down over 90% on your investment in Citigroup. Do I want to be in the banks when we have COVID cases rising? Do I want to be in the banks when we have a lot of bad loans out there? Do I want to be in the banks when oil is starting to look ugly again? I don't think so. I own 0 banks in my long-term portfolio because I got burned back in the financial crisis, and I think you stay away from those stocks. So I'm going to be done with my run-on sentence here in 1 second, but I'm just saying, if you're buying the dip today, I think you're buying this tech stocks again. I don't mind owning some tech stocks, but I don't want to own any banks. None.
Well, you mentioned the banks, which is a new problem today, and
it's not though. It's not.
Well, it's not
okay,
new.
Give us the new problem. So
right,
Spencer, give us the new problem so everybody knows what the hell we're talking about.
Sure. So what happened was BuzzFeed News got access to about 20 years worth of files from the Department of Treasury's Financial Crimes Enforcement Network. And then they went and they shared those files with this consortium of investigative reporters. So that's why you're seeing reports from all these different outlets, because they shared their documents essentially. And what these documents said was there was around around $2 trillion worth of transactions since going back to the late 90s that were flagged as suspicious, right? So it doesn't necessarily mean illegal, but potentially illegal, potentially fraudulent, potentially related to money laundering or drugs or any other sort of questionable activity. Banks that were cited: Deutsche Bank, JP Morgan, Bank of New York Mellon, Barclays, HSBC. So that's the news here right now this morning. Not, I would say, the most surprising headline. If you know anything about banks, if you've seen Dirty Money on Netflix, they had a whole episode devoted to HSBC and their the way they work with the Mexican drug cartels. And the banks themselves were like, this is not this. They said the banks, this is not new information. We've known about this. A lot of this was self-reported. So I would be less concerned about this than I would about potential bad loans rolling downhill on these banks, essentially. But that's the news this morning. A number of these banks, Deutsche Bank, JP Morgan, getting name dropped a lot in these documents, and now they're having to come to their defense and say, yes, we know this is not new information to us, but potentially fraudulent activity going on at banks. And to me, maybe I'm cynical, but to me, that's not a surprise.
Let's go back to our Deutsche Bank indicator, which we haven't talked about for probably 6 months because there's so many more interesting things to talk about. But we now get a breakdown from key support in Deutsche Bank at $9. And I mean, you're talking about Deutsche Bank at $9. What's the all-time high in Deutsche Bank?
Oh, the all-time high.
Isn't it like 127 or something stupid?
Oh, boy, I'd have to go.
I mean, this shows you, and to newer investors out there, that stocks don't always come back. The banks have never come back.
I see 159 in 2007.
159 in 2006. So it's $9 here now. So you're down 95. So you've decided, oh yeah, Deutsche Bank, how can you go wrong owning, the biggest German bank and over in 2006. Here you are 14 years later and you're down 95% of your money. And it's not coming back. It's never coming back. 842 now, you're down 7% here today. This is a breakdown. This is a whole new can of worms. Yeah, okay, maybe it's just on this headline and maybe they figure this out, but there's bigger issues here. Mitch was alluding to some of the bigger issues here, is that the bottom line is the longer that COVID sticks around, the more people, not talking Wall Street, but Main Street are, hurting. And there's a lot of bad loans out there, not only oil loans. There's a lot of bad loans that people are probably behind on their mortgage payments. I mean, you start to get into a situation where we talked about this in March, and it looked like we might be going into financial crisis part 2. And obviously that didn't materialize then. But did we just kick the can down the road? Are these banks out of the woods? That's my question to you, Joel. Use the technicals, but you start looking at the banks. I mean, Bank of America's $24. I mean, JP Morgan has held up better. It's probably best of breed. It's getting hit here this morning. If I was going to buy a bank, it would probably be JP Morgan, but I don't want to own any of them. I mean, Wells Fargo's $24. We're just hanging out near the lows. We're not even far from where we were in March. So when everybody was selling everything, I mean, the March low actually happened in April, and Wells Fargo was 22. And you think about the impressive rally this market has had, and you think about how crappy the banks have been.
It's there was a lot of forbearance on a lot of these bad, people that can't pay their mortgages.
I think it's still happening.
Yeah, and it's still being kicked down the road. I don't know. I mean, to me, like, this isn't like shocking news that this happened, right? What are the consequences going to be? Are these banks going to get, slapped with huge fines?
Probably nothing. Sorry, this specific weakness this morning, honestly, is probably a buy the dip opportunity in the banks. This specific, the weakness in the pre-market, but I
would tell you, I want to interrupt you on that point. I would tell you, other things being equal, if we didn't have the whole situation that we have in the banks, I would say 100% agree with you, Spencer, that if the bank's only problems was this headline from this morning, I would say buy the dips in the banks. But the banks have big time problems. Why do we know that? Because the stocks haven't rallied. When the S&P has rallied 50% in the last 3 months, or 6 months, the banks haven't even participated. They've hardly participated. Yes, you can say, they did.
Like for a day or two.
For a little bit. But you think about where we were in June when it looked like, okay, we're getting out of this. We flattened the curve and we're getting out of this mess. And Bank of America and Wells Fargo went to $33 and Bank of America went to $28. We've already back down near the lows. I mean, this is not healthy. The banks are not healthy. And that's why what I always say is I want to buy stocks that are strong on dips. I don't want to buy stocks that are weak on dips. And if you're coming and buying the banks now, saying this is a one-off and they're going to bounce right back, well, maybe this is just an event, and I agree, this is probably just going to be a fine. It's probably not a big deal. But there is underlying issue here that a lot of these banks have a lot of bad loans that could potentially start to impact, obviously the stocks. We've seen it in Wells Fargo where they've had to cut the dividend. Yes, we're going to get some more stress tests. And yes, they're giving them the lowest bar possible to try to get over because this is the most accommodating Fed in the history of the Fed. But when you stop and think about it, these banks are not healthy.
No, and they didn't rally before, right? Because of the interest rate scenario doesn't seem to be going their way, right? Banks need higher interest rates. They need economic activity, which is slowing, and there's a lot of loans out there. I mean, if you want to think about all the loans out there to, restaurants out there, I mean, I don't know how much, what percentage it has on the books, but if you have loans out to a bunch of small restaurants in a local
small
community
business
or something, holy mackerel. I mean, when are you going to get that? You're not going to get, I think there's going to be, and that's what Jamie Dimon said. And that's what everybody ignored when he made this statement. It was very weird. He made a statement like, hey, we're bumping up our lost loan provisions. We know it's coming down. And then the next day, some joker from JP Morgan comes out and says, market going all-time highs in 2 weeks. And it was very contradictory. And everyone just kind of sloughed it under the table and said, Chinese wall, and they can say what they want. But I mean, Jamie Dimon spoke the truth about his company, his bank, and what he was looking at. And the market didn't believe him. Maybe this is just coming back to roost. That did he say that in June, Spencer? Was it July? You guys remember what I'm talking about? When he came out and said,
I don't remember the exact timing.
It was in one of their earnings reports. And he just flat out came and say that. So I have a lot of respect for Jamie Dimon. We talk about the Jamie Dimon buy, and this was back in January of 2016. Yeah, when was it 15 or
He
16?
bought some shares of his stock.
It was 16 where he bottom ticked the market.
Yep.
But we didn't even mention this also, and this is from Friday or maybe Thursday. But the Fed is in the midst of their stress test right now with the biggest banks, and the limits that they imposed on the banks as far as dividends and buybacks, those limits expire at the end of the quarter. And they said we may extend those limits, so that's also a headwind here. Is the Fed may prolong the limits on buybacks and on dividend payments that the banks are even allowed to do. Something to keep in mind.
Everything just isn't as rosy as the market, believed it was 2 weeks ago. And we know that, it was just silly town. And we said how much the markets were disconnected from fundamentals. But, I was riding the wave. I'm like, you can't fight it. You can't fight the tape. Market's making new all-time highs. I'm not going to be short. And it pulled the rug out from under it very quickly. We had the fast correction in the NASDAQ in 10% correction in 4 days, which was the fastest one in history. And, you had people coming in and buying the dip and saying, I've been rewarded again and again, this is going to work. And if you bought the dip on, 4 days after, it held up for a week and a half. But now you're breaking down again. You're breaking down below those lows, even on the NASDAQ. So now you can't argue, like, the trends are breaking everywhere. So if you're a trend trader and you're looking here, the trends are literally breaking all over the place. So that's an issue. And again, I've said before, the main issue too is that the value investors are sitting here and saying, where's the value? The S&P is trading 23, 24 times, and we have a pandemic on our hands. So value investors like myself are sitting back and saying, I'd rather be in cash, even though it's not doing anything, or I'd rather, buy some physical assets or something. But it's hard to go buy stocks when they're trading 24, 25 times. They're, near the tops of their ranges, and you've got still a pandemic going on. So the value really wasn't there. So now you've got a gap happening, and when do the growth investors come back in, and when do the value investors start to say, okay, now we're cheap enough where I can start to come in? The value investors have been coming to the banks for a long time, and it's been a value trap, man. And I'm glad I haven't been participating in that, because they look cheap. They're nice dividends, 4%, dividend in a company like JP Morgan, or 3.82%, one of the best banks in the world. I mean, it seems like a no-brainer, but you know what? It hasn't been a no-brainer, because the stock has underperformed too, and that's the best one. So I don't know. Like, part of me wants to say, go in here and, maybe start, nibbling on some stocks. And if you have a ton of cash, it's probably a good idea. But to be honest with you, if I was buying the dip in anything, it's probably tech stocks again. It's probably tech stocks, because they will, if we start to get, a rise in COVID cases, which was so predictable. I mean, it was going to happen when the kids start going back to school and, we start reopening everything in September. We talked about the summer was going to give us a break. We've, if you go in the history of the show and just listen to what we've talked about, we talked back in May and June saying the summer, we're going to get a break from the COVID, because people are outside, people are doing things, they're not congregating indoors. Now that it started, like in Ontario, for instance, they raised it up to 50 people last month, that you could have 50 people indoors. They lowered that back last week to 10 only now. So all your churches, all of a sudden, can't have 50 people indoors. They got to go back to 10. So, I mean, we're stepping back here now, because the cases are starting to spread. So the stay-at-home plays become favorable again. So I don't know if I'm coming and buying Peloton, because it's been on such a ridiculous run, and maybe it's just, maybe that's not the one. But you start looking at some of the gaming stocks. Well, they've been beat up pretty good. Look at like any EA Sports. You want to buy, and if you think COVID's going to start to catch up, EA's down 20% in the last 2 weeks. I own it already, but if I didn't own it, I'd buy more EA here, because you know what? I think EA Sports is fine in either scenario.
The other thing too is, like, okay, buy the dip. I mean, is it going to work eternally? Like, is this really a dip? Is this really a dip? If you look at it from where we were at in March to where we were at last month,
in certain stocks,
this is not a dip.
Well, in certain stocks it is, though. Like EA. Let's go to EA, what I was just giving a case on. That's a nice dip. I mean, here you have people playing more video games. There's no doubt they're playing more video games. We know because the earnings reports have been really well. I mean, this stock broke out from 120. It had, a pretty good run to 147, and now it's pulling back and trying to find support where? In the old 120s, the low 120s again. I'd argue that is a dip, and I'd argue that that's a stock I want to own because I think EA Sports is fine no matter what. Take-Two, probably the same thing. I haven't brought up the chart. I mean, it's up a little bit further, because it was down to like 110. But you just start analyzing it all, and you start thinking there is some opportunities in some of these plays that probably work with rising COVID cases or without rising COVID cases. So I'm staying away from the banks and I'm buying video games. That's what I'd be doing today if I didn't already own video games.
Right. Well, you look at what you went from 74 was that low, and there was support at this 120 area. I'm looking at that one low. You went to one. Let's just do it just for fun. 147 minus 74, so it basically doubled, right? So if this stock goes back to 110, 112, I mean, that would be a healthy 50% retracement of that move that it had and build a base. So I think you're coming in at like 120. I mean,
You're coming in early, maybe.
Yeah, I think
maybe.
Yeah, I think because it's just.
And maybe EA is a bad one to pick on. Like, I own them all. So, Take-Two, like I'm just saying the gamers, maybe you want to go Glue Mobile, maybe you want to go a Take-Two, maybe you want to go an Activision Blizzard, because some of you were saying EA has a lot of physical video games. That's not as good. Maybe you want to go with Sony. I mean, these are the plays that I think work no matter what. So I like the video games.
Sure.
I'd be a buyer. Maybe you don't want to pick on EA. The chat doesn't appear to like EA as much, but there's a lot of those to choose from. There's 6-7 plays out there.
Exactly.
Maybe you
in
buy
the
them
sector.
all.
Yeah, and also stocks, we're talking about a day move, a week move here, and look at your bottom right candle. Those are monthlies, and you can see there's periods where it doesn't go anywhere for 2 or 3 months, right? It doesn't have to automatically go back to 140. It doesn't automatically have to go to 100.
Doesn't have to do anything.
Yeah. So if the best thing here, if it's the kind of scenario that you're talking about, it might take a month or 2 months or 3 months to find a little base here, work its way over, get the institutional, because the institutional group, they're selling up here, right? I mean, they're not only they're probably selling here too. I think you got to look at it just like today and the perspective of everything. I know it's like buy the dip. To me, this doesn't look like. Let's take a look at something else, like Take-Two.
The dip's not as substantial, but it is. I mean, you're a 155, 180. This is a dip. When you go back to 130, it's not a dip. It's a complete give back of the entire move.
Okay.
So if you're looking at dips, I mean, you can look to Amazon. Amazon's a good dip buy. We got, oh man, I can't say that name in the chat. Sorry. What can I call you? Silver. Because Silva Yosi Gura. I'm going to call you Silver. Silver in the chat just said Amazon. I mean, that's a dip, Joel. Here is the company that is firing on every cylinder. This Amazon works in every environment. People are buying more stuff online. Yes, it's trading, maybe 60 or 70 times earnings, but you know what? It's only trading like 3 or 4 times sales. And that's reasonable. And I think you still got Amazon growth at a reasonable price. I own Amazon. If I didn't own Amazon, it's down $600 here. It's down 20% in the last 2 weeks. This is the kind of stock I would buy. I'm saying if you have a lot of cash and you're looking for stuff to buy. If you're on margin right now, you have no right being on margin because there's problems here and we could have issues. But if you're looking for stocks to buy on the dip, and that's kind of what we're doing right now in this segment, Amazon, the stocks that were working and taking off first in March, those are the ones I want to own today.
All right, I've got a stock that you can buy on the dip that was taking off in June.
I know what it's going to be.
Nikola.
Okay, let's go talk some individual stories here. Trevor Milton is on the run. What's going on here? Where's Trevor Milton? I'm just joking. He's not on the run. But where is Trevor Milton? He's leaving Nikola?
Well, I imagine he's home right now. But yeah, he is.
Why?
He is
Did he say why?
He according to the release, I guess we'll never really know what happened. But he has voluntarily, according to the company, stepped down from his role as chairman. So remember, he was no longer the CEO. He stepped down as CEO a few months ago, prior to this whole Hindenburg thing, and he's now no longer the chairman of the company. So that was the news that was out last night. and he also agreed. Let's see. No, that's not a major headline. So he still owns, I think, 20% of the company. And I know there's a lockup expiration in December for all the private investors. But
you can't take the heat.
Even for this stock, the move this morning seems a little bit.
Or is this on him? Do we know if this is him, like he just wants out, or is this like them kicking him out?
Well,
he's
again,
we know he's been very promotional. We know he cusses and swears, and he gives his defense of the Hindenburg. Like the professionalism hasn't been there. We can safely say that.
Where'd you hear him cuss and swear?
On that, they had to beep it out. It was on CNBC when he was talking about Hindenburg report, and he was talking about these blanking short sellers.
All right. Anyway,
I didn't hear that.
He's cussed. I mean, come on, get professional.
The company said that he voluntarily stepped down. We'll never know exactly what went down, I suspect, but that is the line this morning. That's the party line. He said, "I'm out."
Could this be a good thing for it? Could it be a good thing that maybe
he still owns 20% of he's still like the
he still owns a ton of the company, but it could be a good thing that somebody else starts running this?
He was not running it.
What was he doing?
He's not. He was the chairman. He was the figurehead.
I'm sure. He was the one that was out there promoting it every day. He was the only face. I don't even know any other people.
He still can.
Okay.
I'm not sure how this.
It's obviously down 28%, but is this the capitulation event? I mean, the valuation's nuts. As a value investor, I'm not touching Nikola because they don't even make it. They haven't even made a car. We pushed it down the hill. They haven't made a running truck, and they were trying to give it the valuation General Motors at one time. It's just silly town. I mean, really, yeah. Didn't Nikola get his worth as much as like General Motors?
I'm sure at some
point.
At
the highs.
I'm sure
this shows you how stupid this market is. It shows you how stupid this market was. Maybe not is anymore. Maybe this is all coming to roost. But when Nikola got up to $90 a share, the market cap was like $40 billion. For they haven't even made a running truck yet. And GM's market cap at the time was like 40 billion. Yeah, so it was basically up to General Motors market cap. It's stupid. That's all it was. $90 was just plain out stupid. So now it's 24 at a certain price. Maybe that the concept's worth something, but this is a conceptual company, really. Still, we don't even have yet General Motors. If General Motors backs out on the partnering here, and there's so much circus show happening here, that would not surprise me. I don't know.
GM, I think GM is probably fine one way or the other because the nature of the partnership. Remember, is GM got an equity stake, but also Nikola is paying GM $700 million, I think, or whatever it came out to make their pickup trucks for them. So, I mean, worst case scenario, GM's equity stake goes up in smoke and they don't get paid to make trucks, and then no harm, no foul. But I think GM is fine either way. But I can understand why they would trade.
Yeah, this is not going to, don't think GM's going to start to implode. GM's going to be down just because if they have to get out of this, it's like, okay, well, you can't do your due diligence a little bit better on this deal. I mean, 3 weeks later. So, I mean, that it's like a slap in the face to, how they're operating there to a certain extent. So, but, it's not, a huge impact to General Motors whatsoever. Obviously the stock's down, everything's down here today. And I don't think General Motors is going to lose like 10% on something like this. I don't know. Like, I don't want to be a buyer of Nikola. I was impressed how well it was holding up
30,
last week.
Yeah.
When in the face of bad news, it kept trying to bounce back. But now you get like Trevor Milton's out. I mean, I kept saying I can't buy it. I love the relative strength that it was holding up well in the face of bad news. But I was like, we don't know what's going to be uncovered here. And now that Trevor Milton's leaving, maybe there is going to be some stuff uncovered. And I think that's probably what the market spooked about. Milton's getting out. Well, what else is going on here? And maybe some of this Hindenburg stuff is all true. So that's the problem, is there's just too many unknowns when you've got investigations. Who's investigating now? Multiple regulators, correct?
The SEC and the DOJ, I think.
DOJ, SEC. I mean, they start uncovering more stuff. The stock's going lower. So we don't know. If they come out and they say, no, the company's clean, it's going to rally significantly off that. But you have a binary event happening too. But when Trevor Milton's leaving, that makes me concerned that there is more skeletons in the closet here.
Yeah. I mean,
Got under $22. I mean, if you wanna be a hero, I don't know, 21.52. Now that's a 4-point bounce off that low. So that tells me that, I would say if you want to own this today, or if you want to cover a short today, you're going to have to step out ahead of 21.52. You're $4 above it. You just hit 26. 26 is a little bit of the rebound here. That's your resistance right now. I'll have to drill back on the dailies. I think if you really wanted to be conservative on this one and say, I'm not going to try and buy it at 22 or 23 or 24 or whatever, maybe wait for this thing to close back above 30, because you had a mound of support there, you mound of buyers, a mound of people are stuck. And now that old support, which was monthly support too, is now going to be monthly resistance. So
there's just too many unknowns. I mean, we said it last week, and I did say I like the relative strength that's holding up well in the face of bad news, but there's too many unknowns. And you have something like this, and Milton's leaving. What else is going on there? I don't want to touch it just for those reasons.
Exactly. And how are these other electric car companies that holding up?
Well, the funny thing is, and they're holding up well.
I'm glad.
I mean, really well. Tesla here is hell. Look at Tesla today again. Obviously, Battery Day is coming, and this is just the simplest trade ever. Buy it ahead of Battery Day. I mean, it's up $8. I don't know if there's positive analyst commentary or whatever is driving it, or if this is just pre-Battery Day. But the market's imploding. We got stocks getting really hammered, and Tesla's up again.
I know.
That is unbelievable. Unbelievable that the stock's up again. Is there a headline here besides Battery Day being tomorrow?
No, that's pretty much the gist of it.
It's unbelievable. Something we all know about. We've all known about for months, and Tesla's like, oh, Battery Day, we got to buy it anyways.
It's also their annual shareholder meeting, so there will be some more financial stuff tomorrow besides just the batteries. And Elon Musk, I guess he said something about this could be a record quarter for the company. But
he did say that. Yeah. That was an leaked email. There you go. I did read that over the weekend. Leaked email that it was going to be a record quarter. I mean, I hope so.
No. He said they have a shot at a record quarter.
I hope so. I hope they have a shot at a record quarter. The stock's up like 500% in the last 6 months or whatever. So I hope so. It'd be pretty bad if it's like, these profits aren't that great. So anyways, Tesla never made any sense. It doesn't have to make sense though, because this market still, sees it as the future of all automobile travel. And until it starts to rationalize and say that, we got a pie here, Tesla's being valued at like 3/4 of the pie right now, and they're probably not going to eat 3/4 of the pie. Until that happens, the stock's going to hold up well. The market thinks it's going to eat the whole damn pie and leave nothing for anybody else. General Motors, Ford are getting
everyone's going to be driving a Tesla, right?
They're all going to, they're not. They're all going to be driving electric vehicles. I mean, Tesla's been impressive. Obviously the stock's very impressive. I can't buy it here because, it doesn't make any fundamental sense whatsoever. But, as a trade, I can buy it here. So as in a long-term investment, I'm not touching it, but as a trade, the relative strength is amazing. Again, what you see often is a run-up ahead of Battery Day. And, sometimes you see a sell-on news event here. So you're going to probably see some relative strength today and tomorrow into Battery Day. And then, we'll see what happens after that.
Super interesting area here. You can see it just got over 454 just a little over an hour ago. But look at that. You got a pair of highs. Let's just call it 460 because that splits the high from 57.79 and 61.94. That's a level for you. You break above that, then you can say hello to 500. 449.76 has been the high close of the rebound. So we're up $7. We're holding in here. I'd say 450, 460, man. Bust above 460. No doubt I'll be on the road to 500. If this thing cannot hold 450, could give some back here. And I know you got the dynamics with the Battery Day and stuff, but man, what if you were still long this thing? Like you rode it up like I do. I'm kind of talking against my book here. And then
you are long this thing.
I want out.
Lisa won't let you out.
She's still worried about the floor in the kitchen. I can't talk to her about anything else.
She's not worried about the Tesla. I mean, the Tesla stock's going up. So it's been
But just think what a gift this is.
We've got Alan Brochstein coming on in 1 minute. I just want to say one stock before we get Alan on here.
Sure.
NEO. What about NIO? Because if you're really looking, what is the other big alternative, electric car play out there? And that's been really performing well. You have a lot of concepts, but what do you have? Who do you have still making real electric cars? Is NIO.
Well,
the stock's holding up well.
Yeah.
You know what? I have had NIO. I've played it a couple of times here. I like it here right now. I like this pullback in NIO. So you know what? On the pullback today, if Tesla can hold up like it is, and Tesla's your leader here, Tesla starts rolling over, NIO will go with it. But if Tesla wants to hold up like this, it's not out of the realm of possibility that NIO could start making new highs again. So I kind of like the pullback this morning. It's down 3% or 2.5%. I'd be buying NIO if I was buying an electric car play.
All right, let's pivot here and bring on our guest, Alan Brochstein. He's the author of the 420 Investor, founding partner of New Cannabis Ventures. Alan, good morning. I want to know when you're buying your electric vehicle, whenever that is.
Well, first of all, I have to complain about my Zoom skills because it's not letting me start my video.
There we go.
We got to see Alan.
No.
Okay, there we go.
There we go.
That's weird.
Yeah, complain about your Zoom skills, right?
I don't know. Zoom, it must be.
Oh no, it's saying cannot start video. Failed to start the video camera. Please select another video camera.
Huh.
Unplug your video camera and plug it back in. I've seen that work. That's how I do everything. Kick the box when it doesn't work.
All right, I'm going to pick a different one. I don't have a different one.
That usually works. Weird.
We hear you well. We hear you well. So it's like radio today then, Alan.
I got all dressed up for you guys.
Oh, no. We got to see Alan Brochstein. I tried to unplug it and plug it back in. One time. We'll give you one chance.
There's nothing to plug. It's my
USB. There's got to be a USB there. Pull the USB and pull it.
No, it's my whole computer.
Oh, well.
There's a video camera built into your computer.
Yeah. All right, well.
I don't know how to fix that. Then kick it.
So look, I don't go anywhere, so I don't need a car. I go to the grocery store twice a week. I could walk.
You're selling Tesla.
Point. No one's going anywhere. Alan, I want to lead off with Aurora Cannabis, who I believe is due to report tomorrow. Did I get that right? Tomorrow after the close, if memory serves. Any surprises that we should look forward to, or just more of the same?
So there's only really, in my view, one thing to look forward to tomorrow on that, and that's the new CEO. There we go. I know what the problem was.
All right.
User error.
There he is. Dressed to impress.
Hello. So there's a new CEO. He wasn't very well received. The announcement of him wasn't very well received. Miguel built the CBD business in the United States that they just acquired, and I think the reason why it wasn't well received is people had expectations they get more of somebody with global experience. I have no opinion, and I'm actually looking at this as like, if you go back to May, the last time they reported, I was butt long this stock in my model portfolios, and it was a little bit scary. If you look at the chart, and people had written off the company for dead, and then the stock literally quadrupled over the next few days. So in the end, that was probably more of a short squeeze, but a little bit of reality. So here we are back to that, essentially that same area. And I am not butt long, I'm slightly long in my model portfolios. I think Aurora has been written off for dead yet again, and it's not dead. But the question I would say for not only Aurora, but the entire Canadian LP space is, when's it going to get rocking and rolling? And back to your question about tomorrow, it's really, I think there's the chance that people reassess their view of this person. He used to work at Altria, I believe. He may be the right person. He may say the right things. I don't know yet. I don't think we're going to quadruple tomorrow afternoon or Wednesday morning, but of the largest Canadian licensed producers, I think I have Aurora as better than average of the top 5. Below average is easier to call. To me, that's Canopy Growth on valuation and Tilray on, I don't know what the hell that company is. But, I know, Dennis, you're a big fan of Afreer. You've paid a lot of attention to it. And
well, just because from my hometown, I haven't been a fan of it, but I'm familiar with the people who are running it, and obviously it's from my hometown, town of only 25,000 people. So
yeah.
What do you think of it? The stock's holding up, actually.
So I when Erwin Simon went there, he joined at a time when the company was under a lot of pressure because they'd gone, like a lot of their peers, on this global shopping spree, and there was a lot of insider pocket lining, it seemed, and so there was a lot of turmoil when he went there, and I thought, and he's not the only person that I would describe this way, but so many people they think they're these corporate superstars, and they can just walk into a new industry, whether it's the cannabis industry or anyone, and just shine immediately. And so I had some doubts about Irwin Simon, and I followed this guy for a long time and just have a few yellow flags on the guy. But I will say, a year and a half, almost 2 years later, I think he's done a pretty decent job. They've done a great job in terms of leading market share in Canada, which is an important first step if you're going to be a cannabis company. I think they have too much capacity, and I think that's going to have to be addressed. But I've warmed up to free. I have no positions right now, but they'll be reporting in mid-October. I have my eye on them. So.
I mean, expectations, even going back to ACB, are low for these companies now. I mean, you can
very
see it
low
from
in Canada. Yep.
You can see it, like everybody, when the US came out, now they're talking, GrowGeneration, and a lot of people have moved on to the US.
Yeah.
And they've the Canadian companies have been forgotten. So if they come and, say anything like showing like, oh, we're not that bad, maybe they could get, even a short squeeze pop, because there's a lot of people that are short these things too.
So for the Canadian bulls out there, let me give some hope, and for the bears, a little bit of a warning. So, I've been following that space for a long time, and it's very sentiment driven. And there's this group think that always takes over. Like in October of 18, these things were the best things since sliced bread. They're going to keep going up. And right now, I would say the sentiment is about as bad as it can get. So just if you step back and you look at what's going on, the market's actually improving. And there's still a lot of structural problems in Canada, in my opinion. But obviously, the valuations, they may not be great, but they're certainly better just by definition. And the sentiment is about as bad as it can get. And if you look at the data, on Friday, StatsCan released data for July. I don't know why they're so slow up there, but for July, and it showed that retail sales were up 15% sequentially. And there's been a lot of noise in data, both north and south of the border, because of the pandemic and stocking up and all that. This was a clear sign that the Canadian retail market is alive and kicking. And it's been so challenging for so many reasons. But I would point to just two things that people should look at. Go to the online stores and look at the products that are starting to hit. Vape pens are very popular. Edibles are doing okay. These are new products. For a lot of reasons, they've been kind of slow to roll out because of how bad the prior rollout was. For those that aren't paying attention, these LPs grew flower, they shipped it, they thought it was selling, they found out it wasn't, they had to lower the price after the fact or accept it back and destroy it. So this caused a lot of bad things in the numbers. And so this time they're a little bit more cautious about how they roll that out. But the bigger story, and it showed up in the data because StatsCan releases it by province, Ontario has been very slow to open stores. This is a recurring theme, not just in Canada, but in California and other places as well. And Ontario's store count is expanding rapidly. And I think about half of that gain from July to June was due to Ontario, where there's more stores. So there's a couple of dynamics that I think favor. Now, if you're going to be bullish on Canada, all year I've been saying, I don't think the best buys are in the largest names, but certainly that's the one the traders go to. And let me switch gears and give you one more thing. In the past, when the US stocks have gotten some interest, it's helped the Canadian ones, whether it should or shouldn't. And so logic might dictate that nobody should say, well, the US elections ahead are a catalyst for the Canadian companies, because theoretically they're not, I don't think. But with that said, the way these ETFs work, with the way stupid traders operate, I subscribe to briefing.com. Anytime there's something positive on cannabis in the United States, they highlight these Canadian tickers, even though it makes no sense. So I'm very bullish about the election season here. And it's more than just a trade. This is a game changer, I believe, for the US cannabis space. In the past, there's been these trades due to the election. This year, I think to really be a game changer, we need a Democratic Senate. But we have some states that are voting to legalize, 4 of them. New Jersey, extremely important because it's on the East Coast, could trigger a wave of other states adopting. Arizona, an important state. It's a big medical state. But those 2 states are very important because there's a lot of publicly traded companies already operating there. And then in addition, while these states aren't big, they're red states, South Dakota and Montana. And so if their voters approve to legalize, it would move us more towards a lot more senators on both sides of the aisles, at least understanding what's going on. So big election ahead.
All right, and Alan, speaking of the U.S. side of this market here, U.S. cannabis was one of the hottest trades of the summer. It's definitely cooled off over the past 5 or 6 weeks, or maybe 4 or 5 weeks. But
yeah, since they reported, it was a sell the news type of event. Yes.
Yeah. So just talk about that trade, because I'm long U.S. cannabis. I was excited to see the MSOs ETF. I don't need to own it because I own a number of the top holdings in it, but I was excited to see an ETF just for U.S. cannabis companies. Talk about that trade right now.
Sure. So, well, first of all, to correct that U.S. MSOs, it's not exactly what you said, but it's more getting closer to what you said, and it's only $8 million in assets. So that's a non-event right now. So look, the run up into the reports was justified for these largest MSOs, and people talk about the big 4, and just for your audience that may not be familiar, typically the ones that they've talked about have been alphabetically Cresco, Curaleaf, Green Thumb Industries or GTI, and Trulieve. And these 4, the reason they talked about them, they all have billion-dollar market caps and very large revenue, and all of them delivered very encouraging quarters in terms of rapid revenue growth and as well either profitability or moves towards profitability. So both the top and bottom line improved across the board for those. But what was interesting to me beyond that, and the numbers got really big, by the way. I got excited in May when GTI crossed 100 million for a quarter. We had 3 companies cross 100 million this quarter, and Cresco's really close. But it went beyond that. And everybody needs to understand the United States is not a winner-take-all market. Because of each state being different and some states limiting your presence there. So like Trulieve in Florida is half the market. It's amazing, but they can't be that everywhere. It's impossible. And Curaleaf has the largest market cap, but they're limited in states like Pennsylvania to only 15 stores. So they can't be half of Pennsylvania. But we are seeing more companies. And so TerraSend is a company that has $1 billion market cap now. And this was the one company of all that's managed to be a Canadian LP that figured out how to win in the United States. And so they have rocked and rolled and they've held their gains. Another company that's really crossed my radar screen.
Real fast, TRSSF is the
yes
on that one.
I'm sorry?
I'm just saying for listeners,
TRSSF or TER in Canada.
Right.
And then Columbia Care, which, they did everything you can do to not be liked as a public company. They were a SPAC. People are leery of that. They stayed listed on the NEO for a long time. They didn't really push their US listing, but that company is right at $1 billion now. And they've gone out and done some big things with the Colorado acquisition and now a pending California acquisition. So these are 6 companies, but the list goes on. There are a lot of companies. And so to your question, what happened was a lot of these companies ran up into the report and held some of the gains a few days. But what we saw happen was investors decide that, hey, these companies have done great, but there's other companies. And so the list goes pretty deep in terms of the multi-state operators that aren't at $1 billion yet, but that have really done well since the largest MSOs have rolled over. Now, I think the largest MSOs have had a nice pullback. So people that want to trade those names, I've been actually adding exposure recently to these names in my model portfolios at 420 Investor.
What about GrowGeneration? Can we just like go into that one? Because this
Sure.
is the one that Kramer's been talking about. This is
Yeah.
the one that a lot of people have been talking about. It's kind of in consolidation station. You had this really wicked move in the middle of August where it went from $10 up to $23, and then it's pulled back and consolidated here now. What are your thoughts on this one?
So I've only been following this company since it went public, so I do know it fairly well. And I have to say, I really blew it. I got out of it entirely, almost entirely, because of that capital raise. And they raised capital, I'd like to remind everybody, $48 million at $5.65. So there's a lot of people sitting fat and happy in the name right now. And so when they did that capital raise, you have to roll your chart back a little bit to see that, but it was at the end of June, early July. And yeah, I guess it's there. So the stock pulled back, but it never was anywhere near that 565. And I missed out on several chances to buy it back. So the stock gapped up when they reported, and it was a very strong report. And this is a very solid theme, I think. And the company, I believe, has done a good job in terms of executing. It has not always been easy. For instance, in 2018, they had negative same-store sales. They had a primarily Colorado base, and they've become more diversified now with exposure to newer markets like Michigan and Oklahoma. So the stock ran up to an incredibly stupid level, in my opinion. And this was because they appeared on Kramer and Robinhood and all that. And then a short report came out. And I have to say, a lot of this information, well, look, these short reports are always just bringing up stuff that's not necessarily new, but it's putting in front of people's face. I was a little disturbed by this. I did learn some things that I didn't know. And I think, look, I know these people very well, and I think they've done a good job. And I think there's some things in their past that may be a little bit concerning. I think to me, what it says is they probably need to bring in more professional management, whether this short report came out or not. They've done a good job of taking this company to where it is. But these guys are more investor types, not operators types. And one of my complaints, and it really came out in that short report, I don't know their CFO, but he doesn't look like a NASDAQ CFO. I'm not talking about physically, but his background. And I think they need to upgrade their management before I'd be really confident in the name. What I've been telling subscribers at 420 Investor is I followed Scott's Miracle Grow for a long time. And to me, it was always a challenge because I used to joke about they're focused on the wrong kind of grass. They're focused on the right kind of grass, but a bigger focus on the wrong kind of grass. But this is a great pandemic company. People are sitting at home, looking out in their yards, and they're willing, they have extra time, they're willing, and they have extra money if they have a job. So they're working from home, they see their yard, they're spending more money. And this has driven Scott's Miracle Grow SMJ a lot higher. But I would say if you like GrowGen, you should be looking at Scott's Miracle Grow if you're comfortable that the pandemic's not going away tomorrow, because their cannabis business is very similar, and they own the brands. GrowGen sells their stuff, but SMG is the brands. And I don't get why Kramer's not interviewing Jim Hagedorn. Jim Hagedorn's like Jim Kramer, just like a crazy guy. Be a great interview. Maybe he's been there before, but not recently.
They did have him on before.
You did have him on before.
Yeah,
I can imagine those two being a lot of fun to watch. But so the cannabis story there is very similar. And I think the valuation to me makes more sense. I get it, why people would be interested in GrowGen, but there's a lot of M&A that's going to have to drive GrowGen's growth. Like they gave guidance that includes M&A. And with this short report, if I were selling my company and I was aware of that short report, I might pause a little bit. So they've done I think that's been a core competency of GrowGen. They've done some great M&A. They use their stock and a little bit of cash, and they get good deals on their M&A. With that said, there's a lawsuit right now that was filed by GrowGen against the last deal they did, I believe. It was in Michigan, one of the last couple of deals they did. And it shows some real flaws in their due diligence. So just to answer your question, I have a very small position in GrowGen. No, I'm out of GrowGen. I have no position in GrowGen right now.
What about Tilray? Someone's asking about Tilray.
Yeah, it's the least interesting of the large LPs. And I would say if you're going to be in a large LP, before there, look at Aurora is the cheap play that could be rescued maybe or turn around. Look at Kronos as the big wad of cash that has a lot of the same opportunity set as Canopy Growth, although it's not as advanced. But they don't have the cash burn of Canopy Growth. And they have the strategic partner. Or look at Afria as probably the best combination of operational expertise, management capability, and balance sheet, although it's not the best of those balance sheets. I don't have positions in any of those except for a small one in Aurora right now. I think United States shouldn't be the exclusive focus. In Canada, I'm more interested in some of the smaller names right now. And
Alan, full disclosure, I dumped my Elcana, my LQ.
I love Elcana. You're crazy. The insiders.
You know what happened? You know what happened? One of my money managers switched firms. And there was like a big rigmarole about transferring that stock out. And I looked at the chart. Yeah, I don't know, because I don't know. It was
Lisa
hard
let you
buying
sell
it.
something?
So I sold that. I thought that stock was going to do a lot better.
So I got to tell you, that one kicked my ass too, because I was afraid that Aurora was going to dump their stake, and they did, and they dumped it at a low price, and the stock just went up. So I've just said, you know what? You got to look forward. You can't look backwards, and that is one cheap stock. And yes, I'm a cannabis guy, but that's a liquor story. They're cannabis.
I know. Just. Dennis.
What's the symbol on that one?
LQSIF.
Dennis told me not to buy it.
Too many symbols. LQSIF.
Dennis, you told me not to buy it.
CLIQ.
LQSIF.
I don't buy anything with 5 symbols.
Yeah,
No, it's CLIQ. CLIQ on the TSX.
Right,
Yeah,
CLIQ on the
LQSIF.
TSX. Okay.
And the other one that I had that I don't know how I made money on this trade. I don't even know. Leaf Buyer Technologies.
Oh my God, that's a pump and dump.
Yeah, I know.
Pump and dump, Alan says.
Joe, it's
I don't know, because that was supposed to be the Google of cannabis. Like, you were supposed to be able to.
I remember Joel was trying
that
to
only
sell me
cost
on
them
this.
$200,000 to get that out there. But yeah,
I got out of that one too. Woo!
All right.
So 200,000 to get that out there.
Great trade. Alan Brochstein is.
I have some dogs in there. I got to have some dogs in your portfolio.
It's true. Alan Brochstein is the author of the 420 Investor, also a founding partner at New Cannabis Ventures. He's at our cannabis events. He's quoted frequently in our articles. We appreciate his time as always, Alan. Thanks a lot, and have a good one.
Have a great end of the year, guys.
Yeah.
Thanks.
Yeah,
Alan.
we'll get you on before that, Alan.
Yeah, he's coming on before that.
All right. That is that for Alan. Let's do a couple tickers if I can. I know we went late on Alan.
Sure.
But just so much stuff to talk about. I saw a few people mention Costco in the chat. They report earnings, don't they, this week? Did I get that right? Yeah, they're
kind of late, right?
Yeah, they're on the 24th. They're after the close, and so they're on people's radar this week.
I'm long it just because it reports this week. You know how I like
that
long the stocks to report. Yeah, it's actually holding up okay. So considering, so I'll limit my comments.
Boom. Short term, I mean, you're trading down. I don't know how much volume. Only 9,000 shares. When you trade it down this much, I'll go to the pre-market chart here. Really, you just got to look at yesterday's range, right? And the bottom of yesterday's. We haven't taken out yesterday's low yet, have we? Let me see here in Costco. No, we're not even close. So showing some relative strength here, 331.20. So that's a good thing. That's your support. A lot of people would like to see this in unchanged today, 335.96. I would even throw an order if you want it out today on a pop. I would even go out there at 335.50, in case they open it, 334, and then, they get some paper buying it up, and then boom. So the close will be resistance and support, good support night on a relative strength basis. Yesterday's low, 31.20.
Also in the chat and also reporting this week is Rite Aid. They're on Thursday before the open. We have Nike tomorrow after the close.
Nike pullback could be interesting ahead of the earnings report, because you'll probably see some strength in this ahead of the earnings report. So I don't mind the Nike pullback this morning.
great support just above 110 in this one. I don't know if you're going to get it that cheap, trade down $1.93, but that 110. Look at all those lows of 110 before you went up and kissed 120.
And then just a lot of ratings today. Capri Holdings upgraded, Dunkin' upgraded, UPS got a new street high price targeted from Credit Suisse this morning. I think it's 159. Did I read that? I read that like 2 hours ago. But
Stocks are firing on all cylinders.
sure
UPS and
right.
FedEx.
Yep.
I'm sorry, 192. 192 is the new price.
I'm sticking with my FedEx.
Yeah, you're going to be complaining about that one soon.
One day.
Yeah, you will. Oh,
I complain about everything.
You're Dennis.
I'm a complainer.
Please do something. Can you sell half of your FedEx? Then it's going to go back down to 200.
I know, and then I'll say, why didn't I sell? It's going to go back down to 150 probably, and be like, wow, that was such an opportunity back when everybody was in the COVID bubble. And hindsight's 1 year from now when we're all out of the COVID bubble and we're going back to stores and eating at restaurants. Like, why didn't I sell my FedEx?
There'll be like this old beaten up FedEx truck like going down the street or something, and you'll be like, with a
I'm
flat tire.
still holding.
I don't know. I don't like that it had. Well, they faded.
You don't like something about this chart. This chart's been phenomenal. How do you not like this FedEx chart? Straight up.
Okay. When did it peak? On what day? Earnings
what day? Everything, but it's still holding up pretty well. Market's down 10%, or the Qs are down 10%. This thing's down like nothing.
Dennis?
Earnings day. It did. It peaked on earnings day.
Let's see. It's at.
Joel's a short seller.
238.5.
I'm not buying anything today. Like at least, I should be. This is by the dip.
How about?
So I buy video games today. I'm buying video games today.
How about 223 versus 253?
Oh, I'm not doing it. I already own FedEx. I don't have to be double long. I already have it. So I'm already making money if it goes up. I don't need to make your lunch on that one. I'm buying video games, Joel.
242. I mean, that's your resistance. If you get a look shot at that today, Dennis, 41.95 was the low from yesterday. 42.11 your low on Thursday. 242 is your resistance. And pre-market low, let's see if you get a big area. Next daily support comes in at 230.51. S&P's coming up off the low.
Rally.
Yeah, we got a rally going.
Little one.
Probably has seen the high and the low for the day, maybe, and then we'll just go up and chop in like the 3270, 3280 area for the rest of the day. But they tried to press it when we are on Allen under 3250. Now attempting to rebound going into the 9:30 p.m. open.
All right, that'll be a wrap for us. I see all the likes. I appreciate the likes. We appreciate the super chat comments as well in the YouTube chat. Thanks to all of our participants on YouTube. What
do you mean super chat?
When you can donation, more or less. Super chat is you drop us.
I thought there was some secret chat. I didn't know.
No.
In addition to the other four.
What
about TikTok?
Exactly.
We can talk about
Joel, do you want to talk about TikTok? Let's go. Let's talk about TikTok.
I heard that Trump's going to nominate TikTok to the Supreme Court.
Maybe. That'd be a pretty good one.
All right, that was a good one. I'll give you that one. That was good.
Oracle, Walmart, both in the green.
I'll give you that.
I'm long Oracle. I'll talk against my book. I think it's a selling opportunity. But I'm not selling it because I'm in from $8. So anyways, Oracle. It's a big pop. I mean, in the stock.
It's been holding on, man.
Every time it pops up on this TikTok stuff.
Yeah, and it didn't get slaughtered after earnings. 59. Dennis, hold on. Put a stop in at 58.95 and a half.
Wants me to put a stop in on it.
58.95 and a half. And then
long and strong.
And it's holding up, man. This is so un-Oracle. This is un-Oracle to be up this long and hold on. I don't know. We'll see. It's bucking the market. It's up to 250.
We got a rally going on here.
Yeah,
All right, do. You can email us with any feedback, premarket@benzinga.com.
Sure.
Please remember that all the information and material from our show is meant to be used as informational purposes, not for investing or trading advice. We'll be back at 3:40 p.m. Eastern Time on our YouTube channel. In the meantime, everyone have a great rest of your day, and good luck.